The greatest exposure to Libor from a direct financial impact standpoint tends to be in the areas of corporate loans or syndicated lending, so in general loan products. And then in our most recent Executive Institute panel, the audience also mentioned derivatives as the next most impacted area, because naturally you have to hedge your loan exposure, be it from a currency standpoint or from an interest rate risk standpoint. I think there are a couple of avenues in which corporates can pursue to get themselves familiar with this transition. The ARC, so the Alternative Reference Rate Committee, which is a working group for the US dollar Libor transition, was tasked with looking at Libor alternative. It has a very good website and a FAQ that can serve as a good reference point. We worked with the AFP to come up with a corporate perspective. And then more generally, just get involved, look at the AFP website, which has a very good checklist, and reach out to your bankers to find out more about what your options are or understand your current exposures. So in the more indirect areas of impact I had mentioned in the session was around supply chain finance or late payment fees. So if you look at oil and gas contracts, for example, if there is a late delivery or late payment on either side, the penalty rate is typically Libor. In other areas of impact, you might be providing your suppliers or actually your customers with a line of credit as part of your supply chain activity. That will typically have a late payment fee associated with that. And then if you look at your internal infrastructure processes, your accounting rules typically have Libor as an input. Your systems or your technology typically has Libor as a data feed. So there are also a bunch of systems and process changes that you would have to do in addition to looking at the contracts with your counterparties, not just your bankers. So the guide to Liboration, or we call it the road to Liboration, we first articulated why this is an important change. I think many people had expected that this is just a transitional issue, not to use that word in a different way, but that it's going to go away and it's not going to be a big deal. But it's important for the corporate end user to understand that Libor as a rate is not a sustainable benchmark, and the drivers behind why there's a need for change. And so we explained that, and then we talk about what the impact for a corporate would be. So in two ways. One is, what is SOFR? How is it different from Libor? So you really understand what you have to do to use SOFR. And then specifically, what parts of your treasury operations would be impacted, from your financial products to your, like I said, your treasury processes to your back office activities. All of these, it's worth considering. And then we finally lay out an action plan, which also match up very nicely with the AFP website with a task list in terms of what are the immediate actions that you can take. I think it's a very long transition journey. You don't have to solve everything now, but at least you need to know where your pain points are, what you need to look out for, and then stay abreast of this transition so that you're not blindsided at the end of 2021.